Morning, Steve Reed in Chicago with the morning grain comments. Prices are lower overnight. We've got beans down about 8 cents. Corn is down maybe 4 to 5 cents, and wheat's down about a penny. I think overnight market is focusing on the crude oil market and the impact that the May contract had on the futures. And crude is lower again today. Again, crude is all about the fact that there's too much supply, not enough demand, and not enough storage space. And so the rest of the commodity markets are lower, and stocks are also lower. Yesterday was a lot of numbers days. As far as the USDA, they dropped the winter wheat crop estimate to 57% good to excellent from 62 last week. So big declines in like Oklahoma, Oregon, South Dakota, Texas, Washington, and even in Kansas. So that decline might offer some support to the wheat market, along with some dryness across northern Europe and parts of the Black Sea. We also have been hearing talks that Russia might suspend exports of wheat for 6 weeks if they meet their quota soon. As far as the bee market is concerned, again, we're watching to see if China comes in and buys U.S. soybeans. Right now they're buying August out of Brazil. Brazil is still cheaper. And we'll see when China steps in and starts buying U.S. beans. That certainly would help the soybean market. USDA said about 2% of the soybean crop is planted versus one average. Most of the planting is down in the south. Mississippi is 21% done, and Arkansas is about 8% done versus 15 average. Over in the corn, again, concerned about lower energy prices, lower ethanol margins, lower ethanol demand, watching the export demand and the feed demand. USDA said that about 7% of the U.S. corn crop is planted versus 3 last week and 9 average. For Illinois, 8% is planted, Iowa 2%, Minnesota 1, Missouri 11, Nebraska 2, and the 2-week forecast for the U.S. Midwest looks pretty favorable, at least for the Midwest, to get plantings done on a timely basis. There could be some excessive rains in the second week in the Delta and rain in the Southeast, so those areas will continue to be waterlogged. So again, when looking at farmer selling, I think that they should increase inventory selling, even though, especially in corn, prices might be below what is considered break-even, and step up and sell a little bit of new crop at these price levels, because we could see prices continue to trend lower if the virus isn't put under control, if the economy doesn't get back to normal, and if supply exceeds demand in the fall. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.